2006, 7, 8, and 9.
And we're live.
10,
Bruce, chat
11,
Dennis.
12.
Bruce, you may want to
6 and
mute.
12.
Is he talking to Dennis, or is he on the phone with the IRS? I think he's on with the IRS.
Yeah, show you how. Here, let me show you how real quick.
Okay, yeah, it
I'm
sounds like
not trying to be an ass. I really am not.
Stuff.
All right, I got him muted.
Yeah, my chat's not working, or my keyboard's not working. So.
And I've got my control room up now. So.
Okay. Wow. Hi, everyone. Nice to be back from the holidays.
Hello. Welcome.
Hello. Welcome.
Bookkeeping.com. So, a couple of things, by the way. You all saw we launched the first few lessons in our Excel course this week. We got more coming out on that and on cloud accounting with QuickBooks Online. And here comes Doug Sleater. Welcome to the show. You're looking very Hawaii today.
I am.
Nice.
It's my last day before some vacation.
Oh.
Not going.
I thought your whole life was one big vacation, Doug.
It is.
So,
Go ahead.
Hi, Gina.
Hi,
we rolled
Doug.
out Excel. We got more coming out next week on QuickBooks Online. We have a hashtag for this show now that I came up with, which is #SOBQB.
Wow.
That's just for today anyway, since the topic is QuickBooks, right? School of Bookkeeping QuickBooks, SOBQB. You all put that together, right?
Yes.
Just making sure. What's this little doohickey up here? Oh, I have a draw app now. I can draw on each other. I can draw on you guys. How
Nice.
exciting. Look, a squirrel. So, yeah, exciting stuff. You guys all know the... great, now Doug's going to start drawing on us.
That actually isn't new, Seth. It's been there for a couple weeks.
I don't
think
pay
you just
attention
noticed
anymore.
it.
I did, because I was going to bring up the chat and to get rid of the control room to see what you guys were saying in the chat. And as I moved my mouse up there, I noticed this little weird red symbol and pencil-looking thing, and I'm like, oh, okay, that's new. But I guess it's not new. It's just new for me.
But it says this user is not running draw invite.
Uh-huh.
Uh-oh.
So I guess we both have to be running it in order for you to mock me.
Or you have control.
It's probably you have to invite me. So it's all good. I don't need to.
Yeah,
We're disappearing into the Google abyss.
There we go. Well, that's a whole different hangout. So we'll have to reserve a day once again to play. I remember a while back they had launched a new app in the Google tools for the Hangouts, and we spent the whole time just sitting there, all of us, because it was a collaborative thing where we could draw and do all these shapes, and all of us were just going crazy trying to figure the thing out. What?
Was it Cashew? What was it?
No, it wasn't Cashew. It was an app that worked with Google Hangouts. It was some kind of drawing and presentation type app. I forget which one it was. But I remember we were all going crazy with it for a while. No, Cashew is the cloud accounting app.
Oh, okay. I'm getting names confused now. I'm sorry.
I thought it was a type of nut.
Well, that too.
Yeah.
Joanne, we're a little slow this early on Friday.
Who needs their second cup of coffee?
It's
I'm already on it.
8 o'clock on the West Coast here.
I'm already on cup 2.
When I click that draw, it reverses my face. Look.
Oh, so it gives you like a mirror image instead of the normal camera view.
Huh.
Maybe if I draw on somebody. Oh, do you see that? Oh.
I can see you're drawing on yourself. I can see it on you.
You never get rid of it.
Doug, you have something on your face.
You get rid of it. There.
What if it's poisonous?
Find the eraser.
So,
Sorry, I want to just get rid of it now. I can't.
you probably just have to turn the app off. Like, just
Like
cancel it.
Funny pair of glasses, no.
There it is. See that?
Hey,
Now,
Doug, you got to do that on your next conference call with the Slater Group.
There
Yeah,
you go.
I think I'm going to draw on Dennis now.
I didn't say anything.
That's funny. So, all right. So, schoolofbookkeeping.com, of course, is the website. At School of Books on Twitter. That's the official Twitter handle. Handle. See, it's too early. I can't even talk yet. I need more coffee. And thank you, Joanne, for tweeting with the hashtag #SOBQB. Which reminds me, I should probably have that up on my screen, on my other screen.
Yeah, that's exactly what I'm doing. I'm a little slow this morning myself.
Yep, I see they're coming in now. We've got First Class Tax SO tweeted, excited to be checking out the live hangout in a couple minutes at School of Books topic, QuickBooks Cleanup and Review, #SOBQB. And Joanne talking about reviewing a QuickBooks file with @Nerd Enterprises, SOBQB. I like this.
Woohoo!
So we got at School of Books, we got #SOBQB. So if people have questions, that's a good way to ask them. Just don't ask them. But use the hashtag on Twitter, or of course you can post it right here on the event page on Google+. We do have the ability for you to comment directly on the video that streams on YouTube, and a lot of people are asking this morning, by the way, is this being recorded? Does this get recorded? Yes, every single one of these Hangouts gets recorded, and you'll find it on our YouTube channel. As it's playing right now live, if you go into our YouTube channel, you have to click the little drop down where the videos are and choose events instead of just videos, and you'll see this streaming live right there on YouTube. I also posted the link in our Facebook group called Accountants, Bookkeepers, and Business Owners, so you can even click play right there and watch it live right there on Facebook and hang out and comment. So lots of ways to interact with us here at schoolofbookkeeping.com's open session held every week. Before we get into the meat of today's topic, does anybody have anything they want to bring up, talk about, ask about? Bruce is on the phone with the IRS, so he can't talk to us right now.
I can tell Bruce about the IRS. The transcripts online only go back to 2009. I tried to get some transcripts from, they only go back like 3 years online.
Transcripts? What do you mean?
You can go and get your wage transcripts, and it's always a good idea if you got suspicions about a client to go see what the IRS has on them. No, seriously.
Yes, indeed.
Well,
Where do I go to find out how much I owe the IRS, Dennis?
well, sometimes they'll actually do a tax return for you if you haven't filed, which you definitely don't want.
You don't want them doing.
You definitely won't like the results, I can tell you that.
No, but what if I owe them money and I don't know how much I owe them?
I don't think that you can find that because it sort of presupposes you filed a tax return that, you know, like say, unless they have gone and done a tax return for you.
No, but let's say I filed my tax return and I owe them money and I, you know, either didn't pay the amount that I owed or went on a payment plan.
Well, you can see what you report on your tax return if it's, I think they're, Joanne might know how far behind they are in posting those things to their system, but I don't know if they've got 2013 posted yet. I think they've got, like I'm working on an audit right now, and it's like 2010, 11, and 12, and so I was able to get the transcripts from my client from there just to make sure that he didn't forget anything when he did his tax return. You know, because
I don't think 13's.
probably not. I mean, they're really far behind.
Okay, so the answer is you can't really find out online anywhere like what you owe if
You
you've
can
made
find-
payments and you don't.
You can find out what people reported for like a 1099 or a 1098 or that kind of thing.
No, but I mean, let's say I filed a return, and after filing the return, I owed the IRS $100,000, and since then I've made a bunch of payments, and I don't know how much I still owe. Is there a place I can go online to find out?
No,
I don't think so.
I don't think so. I think you just got to call.
I mean, you're talking their systems like maybe mid-90s at best.
Right.
Kind of like taking an Odyssey back 20 years in time to.
By the way, do you guys see what I have here? Don't tell the IRS I have this.
Oh, I got one of those. I got like 3 of those.
Call those
Are you feeling like a $2 bill?
better than a $3.
I think that president got screwed.
These are so rare. Why aren't they worth more than $2? You never see them.
Inflation.
Also, I thought it depends too on the seal. There's like some that have the blue seal
Yep.
and the red seal.
I have 3 of them. I have $6.
Wow.
How much taxes do I owe on this, Dennis?
Depends on your marginal rate.
$5.99.
I think it's 50%. I think I owe 3. Yeah, exactly. $5.99. Thanks.
Your tax bracket probably 60%. I don't know.
All right. Doug, how's the Sleater Conference planning coming along?
It is great. We have about 85-90% of the sessions all figured out and put onto this site. Go to sleaterconference.com. You'll see kind of where we are. We have some pretty cool speakers. This guy named Seth is one of them, but there's several of them. Seth, you're going to do 2 real estate ones, right? Talk about it.
That's right. So, of course, just one question. Who's coming with me to the Sleater Conference? We're going to talk about commercial rental properties, and we're going to talk about residential rental properties. Those are going to be the 2 sessions that we're going to be rolling out there. And we're going to talk about some of the nuances of each, such as how to deal with homeowners associations and how to deal with common area maintenance or CAM charges and things of that nature. And I was speaking, Doug, with Deborah, who works at the Sleater Group, and she reminded me of a very important topic that I promptly added into the outline, which is how to deal with Section 8 housing.
Ah, yeah, okay. Yeah.
So we're going to talk about that. We're going to talk about Section 8. Now, of course, you have to be clear on this because Section 8 in the real estate world means one thing, in the military world means something very different.
Yeah, I suppose so. And that's in the vertical. We're trying to get several good content around vertical markets. And so real estate is one of those that almost all consultants have some client in the real estate business of one type or another. Or maybe you have even individual clients that are renting their own properties. So that's kind of.
I have a question. Do you have any sense as to how the going online is impacting, say, like office CRE, in terms of people not necessarily needing to be in one spot? Do you have any senses if it's depressing values, or? I mean, I can see that the online's impacting, like, say, the malls with, shopping online.
So you're talking about the future of commercial real estate.
Right. I know they're having trouble. I know I used to work for WOWmu, and part of my stay there was in commercial real estate, and they're usually they just kind of roll them over. They just effectively interest-only loans, or sometimes they'll be negative AM loans. And the problem is if you have to repossess them, then you get stuck with them.
Yeah.
I think it's going to.
Doesn't that get in the area of real estate appraisal?
Yeah.
Well, yeah, and you can certainly go online and search for, the sort of average rent per square foot of commercial real estate in different areas. I mean, I look at that in Los Angeles pretty regularly. Usually when I'm doing it, it's for financial modeling purposes because somebody wants me to spec out what their numbers are going to look like, on a property, and I need to come up with assumptions about what the cost per square foot is going to be to help them decide how big of a space they need, that sort of stuff, and what it's going to cost them. So. You can certainly do those kinds of searches, and you'll get a wide range, though. It's never really that narrow. And what I've been seeing and looking at this kind of stuff, and also just kind of observing, and what I'm hearing people talk about and say, I think Dennis, you're right. I think that it's going to diminish for a while, but I think there's also there's going to be a shift back to it eventually. There's 2 reasons I think primarily for this. One, I think people as they go more and more offline are going to start to sort of miss the benefits of being, or I should say, as they go more and more online, they're going to start to miss the benefits of being physically present in a brick and mortar situation with other actual human beings.
Right.
And there's this whole movement now in terms of what they call experiential entertainment, where you're going to be invited to come out and experience something. So instead of going to a movie and instead of going to a theme park, let's say, you know, like Halloween, it's getting more and more popular that you go through these little, I don't even know how to describe it, but you go in person to these things that they hold. They'll rent out some space and they'll invite you to come, and they have little scary, haunting things, whatever. And there's more and more of this kind of thing popping up, certainly here in Los Angeles. So
I agree. I mean, nothing can really replace the face-to-face, press-in-the-flesh contact. I mean, human beings are social beings, and so I think there's always going to be a need for that. I'm just thinking that, like when I was working back in downtown about 15, 20 years ago, it was like didn't have the technology where you could just remote enter or the IT department was so full of Nazis that you couldn't really do anything. It was like
right.
Over controlling and that kind of thing.
Yep. No, so I think you're right there, Dennis. I think we'll probably continue to see a decline in the value of commercial real estate, but I think it'll bounce back too. I think it'll just end up ultimately being a shift. There's still definitely something to be said for going out, to a mall in person and doing things there. And one thing there's some things you'll never be able to do online, like get a haircut.
Right.
I have to leave my house to get a haircut, or I can just stop cutting it.
Or do it yourself.
Yeah, or do it myself. There we go. So anyway, it's 8:15, actually 8:16 on my clock, which means it's time for the main event. You guys ready for the main event?
I have some preparation stuff I want to talk about, Seth.
All right, let's do it.
Well, before I talk to clients about cleaning up their database, I always talk to them. I have a client review form that I use, and it has questions on it like type of company, are you a partnership, S Corp, LLC, how big are you, do you use taxes, do you have payroll, all kinds of questions like that give me an idea what kind of problems these guys might be having. Are they brand new? Do they have years worth of dirty data?
Now let me ask you a question. Do you simply give that to them to fill out, or do you use that as a guide for a discussion that you have with them?
I've done both. I use it as a guide for myself. You'll hear quickly how big a company is within the first couple minutes of talking to your client or prospective client. And a lot of times they do not know what they need. If they're a smaller and I just had this week. The one question that I answered that answered a lot of my questions were, I said, what are you looking for me to do to help you with? Well, I don't know. Something's not right. I'm not sure. Well, the question that helped me was, did you do your 2013 tax returns? The answer was no. I was waiting until after our session to send them in. So this tells me what they're really looking for is good financials for last year. That was where I started our session.
Right. And that's the first thing I always ask the client practically walking in the door is, when was the last time you had a tax return filed? What's the last year you had it filed for?
So...
Yeah, Gina, I really like the checklist thing. We had something in our consultant's toolkit that has basically your client interview. And Dennis probably has that from way back.
Yep.
And it's just that kind of questionnaire that whether you fill it out or they fill it out, but it's your first meeting. It structures your first meeting to understand, because you need to understand as much as you can about the client before you start doing anything.
I'm sorry. I have an intake form too, but I think more importantly, one of the first things that I always talk to my clients about is I ask them, because if they're not coming to me, if they're coming to me just for QuickBooks cleanup and not necessarily the tax work, I always talk to them about their relationship with their tax professional or their CPA to see exactly what type of work that CPA is doing in the file, if they're getting the changes back to the file, because I've found, honestly, 9 times out of 10, that tax professional is not giving them those tax adjustments to put back into their QuickBooks file. And so you have to start with beginning numbers. We have to make sure the QuickBooks file at the beginning of whatever year is going to tie into that tax return.
What happens a lot of times is a tax professional will just take the QuickBooks numbers and just stick them in his software.
Yeah,
So
I hate that.
the thing never gets changed. I mean, it's just kind of a rolling mistake.
Yeah.
What I found, it depends on the client and the CPA or tax preparer's relationship with that client, because I found that a lot of CPAs, I think, feel like their client are so sort of non-savvy when it comes to the accounting and bookkeeping side of things that they just don't feel it's necessary, it's worth even bothering to give them the adjustments. So, and I have, and it's funny, Doug, you'll appreciate this. I have my client intake form is a web form that I put on my website that's created in Smartsheet now. I just recently converted that over because Smartsheet lets you create web forms and lets you ask different types of questions. You can do drop downs, multiple choice, and so it's really cool that way. But I actually use the form that I give them, or the information that I ask them for in that form, excuse me, is fairly limited. And the reason is, I like to have the conversation with the client. I like to make it into a discussion. That's why I asked Gina that question about how you approach it. So what I do when I have that initial call with the client is because a lot of times they'll just call me up off the web. I was just watching your videos on YouTube, and if I happen to have time, I'll pop open a note in Evernote. Right, Joanne? And then I'll start taking notes with the client as I'm talking to them, and I'll start asking them those questions. When was the last time you had a return filed? What year? What's your fiscal year? What kind of company do you have set up? How many owners or shareholders or members are there? And so I get all that information kind of in a note form, but this way I'm having a dialogue with the client, and I'm listening. And as the client is explaining their business, and sometimes I'll just point blank say, all right, so after we get past the initial, what do you have? When was the last time you did a return? And those kind of basics. The next question I'll ask them is very sort of open-ended. I'll say, so now tell me about your business. What do you do? Like I ask when I interview people, who are you? What do you do? Who do you do it for? And I basically want them to explain the operational side of their business to me. And while they're doing that, I'm listening and translating that, and in my mind, I'm visualizing what that looks like in terms of the accounting. Right. So if they say to me, I've got residential real estate, immediately my brain goes to look, there's my wife in the background walking the dog. My brain because so she does exist.
No, she doesn't exist, I'm sure.
So my brain immediately goes to a visual of, okay, I've got tenants, they're living in places, they're paying rent, they're giving security deposits. I'm starting to visualize what the balance sheet looks like for that client. I'm starting to picture what I would expect their balance sheet to look like when it's in good form. And that really helps me, because then when I look at their balance sheet, I sort of already have a premeditated concept of what it should look like. I compare it to what I see when I look at their balance sheet. There's certain things I expect to see, and it becomes a red flag when I don't see things I should, or I see things that I shouldn't, right?
Like negative balances in AR and
exactly. And I'm going to do a demo.
Stuff they're used to seeing, right? Now I do both ways, Seth. Actually, I like having the conversation because I get a whole lot of information, like you said. But it depends on how the people come into me. Sometimes I have just sent out the form to them and said, fill this out, and we'll get back and talk.
Right.
And then at that point, I'm asking them, what's the problem? Where are you having your issues? What do you think needs to be done, kind of thing.
Right.
And probably they always say, oh, it should be some really quick changes, right?
Yeah, I love that.
It shouldn't take that long.
Surprisingly, I get a lot of clients who will actually be honest and say to me, look, I have no idea. I just know that the numbers don't look right, and I know that our bookkeeping isn't right, and I need somebody who knows what they're doing to look at it and clean it up. So Joanne mentioned that the first thing to do is compare it to that tax return. That's the reason specifically why I asked them, when was the last time you had a return filed, is because the first thing I'm going to do is the first thing any tax preparer is going to do, which is compare the retained earnings in the balance sheet to make sure it agrees to the balance sheet on the QuickBooks file, right? So the tax return retained earnings must agree to retained earnings on the QuickBooks file. If that's in place, and it so rarely is,
very rarely.
But if that is in place, if that checks out, then you've right there and then you've got a pretty good level of assurance that you've got a good set of books there. Obviously, you're still going to go further and continue verifying, but that means that you've likely got a very good starting point. Now, in those situations that we most often encounter where it doesn't tie, and it could be because the tax preparer is not providing the adjustments for depreciation and those sorts of things, it could also be because what I see all the time, and I'm sure you all do as well, is that post-closing, the bookkeeper posts all kinds of things that affect the prior year after the books have been turned in for tax prep. So now we've completely screwed up the integrity of the book's agreement to the tax return. And a lot of bookkeepers do that not because they're bad people, but because they just don't know better. They don't understand the implications of what they're doing. They just think, oh, this bill is never going to get paid. It's from last year. Let me delete it. Or it was in there and it was recorded as paid, but it really wasn't paid. It was a different bill that's newer that got paid, so let me just unapply the payment. Now a cash basis tax filer, their books are screwed up. So what the first thing I do, and this is why I developed the template that I've got up on my screen right now, is I basically drop the trial balance from QuickBooks in on the left side here, and then I go through the tax return and I key the balances from the balance sheet all the way through, and then you have all the supporting schedules in a tax return that show you all the income and expenses that were used that get you from what was on the books to what's in the tax return.
Yeah, but hey Seth, the problems on tax return balance sheets, they're only on corporations and on S corps, and half the time on S corps, if it's below a certain number, you won't have a balance sheet. And
it's anything under 250, they don't have to show.
But they usually do anyway. It's been my experience.
Honestly, most of the returns I get, the tax, I mean, I always show it on the tax returns that I do, but I'm telling you, probably 70% of the time, when I look at a tax return, you're looking at nothing. It's like there's like zero information on the balance sheet, so then you have to go back to either recreating the balance sheet or begging the CPA to see if he actually did a trial balance.
And on the Schedule C, there's no, you don't.
And at Schedule C, there's no,
the Schedule C is different. With a Schedule C, I almost don't care as much about the balance sheet because there's no balance sheet for tax purposes. So then what I'll do is what I'm going to do anyway, once I've gotten the books to agree, is I'm going to go through the balance sheet and go through the process that I'm planning on showing you guys this morning that I do go through in putting the balance sheet together. But and maybe it's because I generally deal with companies that are a little bigger, I'm not sure, but I've never seen an S corp come in my door that didn't have a balance sheet filled out on their tax return.
Wow.
And even in cases where they didn't meet the thresholds where it was required, the CPAs, at least out here that I deal with, they all do it anyway. They all put the balance sheet together anyway, even though they don't have to, because it's due diligence. They want to see that. You know, they want to see the information there. So the first thing I do, if I can, is I drop the trial balance into this template. I key the numbers in from the tax return. This template actually calculates what the difference is. So if, let's say, the trial balance from QuickBooks says that the cash balance is $50,000 at the end of the year, but according to the tax return, the cash balance was only $25,000. This template figures out the adjustment, debit or credit, and how much is needed to get there. So that when I'm finished, of course, this gives me the journal entry that I need to post, which will force the books to agree to the tax return. And it took me literally many, many days aggregated in terms of hours to perfect these formulas for the debit and credit columns here in order to get this to work. I was doing it while I was at a CPA firm working, because that's the first thing we always had to do when a set of books came in, is let's get the books to agree to the last tax return. And I was sitting there spending hours putting it together, and I'm like, you know, if I could just put a template together, I can drop the numbers in, save a whole bunch of time, and that's what I did. And of course, there was the original iteration, and that eventually evolved into what you're seeing here today, which is, of course, our schoolofbookkeeping.com branded version of the template. Is
that for sale anywhere in your store, or is that part
This is available to members of School of Bookkeeping. So if you're a member, if you're a student at the school, you can go into the under courses. You'll see Excel templates, and this is one of them.
Okay.
So and there's a video there that shows you how to use it. So that's the first thing I do, as Joanne pointed out and Gina pointed out, is the first thing we want to do is make sure we've got a good, clean starting point to go off of. Now, if we have the case that you guys brought up that I don't have a proper balance sheet on the tax return in order to in order to do this, then I've got to put it together myself. And I've got to do this anyway, because even with the starting point in place, then I know I have the starting point, but now I'm looking at the next year's balance sheet, right? So if I just confirm that 2012 agrees, now I've got to look at 2013's books. And I've still got to make sure that the balance sheet, as it has sort of evolved from that starting point, is still properly intact. So, and if you're for the CPAs among us, you guys know this. For those who aren't CPAs, what you ought to know is that CPAs do 3 different levels of engagements, right? We have audits, compilations, and reviews, right? So the audit is the highest level of assurance that says we have really done our work to confirm that these numbers are accurate. A review is somewhere in the middle. Compilation is minimal assurance, right? We just basically put the numbers together based on what they told us. So, but the idea here is that from my experience as an auditor, when we did compilations, or not compilations, but when we did audits or reviews, the basic philosophy, and we used to use the CCH guide, right, and use their checklist to go through to perform all the testing, essentially what it boiled down to is what do? We beat the heck out of the balance sheet, right? And as long as we comb through the balance sheet and make sure everything there is right or accurate, then by virtue of doing that, you end up cleaning up a lot of what's on the profit and loss. Right, because of the relationship, and that's what I wanted to kind of walk through and show everybody today. So does everybody else agree that this is kind of what you do, is go through the balance sheet to start off cleaning up the books?
Absolutely.
Absolutely, yeah.
I have one partnership return I was looking at. The balance sheet was like done in TurboTax. It did not balance. I mean, if you manually footed it, it did not balance.
Yeah.
So Dennis, I'm curious because this is a problem that I have had. What do you do with the extra amount that doesn't balance to make it balance? Where do you put it?
Well, my default's always equity. If there's a if I can't figure out where it's supposed to go, then to me the fallback is equity.
Have to.
Okay. Okay.
You have no choice.
Kind of like
I've used open balance equity, keeping it separate, but yeah.
Kind of like the last resort. I mean.
Yeah, and so we've got a comment in the Twitter feed from @AccountingPiece, and she writes, make sure your tax preparer is providing your bookkeeper with adjusting journal entries for accurate financial statements.
Oh,
right?
yeah. Oh,
Definitely,
yeah.
without a doubt. And so when I get those clients that say, oh, well, they just handle it for me, I don't bother, then the first thing I do is say, great, I need you to call them up and I need you to get last year's adjustments, and I'm going to show the right person at your company how to post them, if I don't do it myself.
The problem with tax returns is that people at CPA firms get so slammed with tax returns, and they feel they can't really bill for their time for doing the adjustments, that they just sort of shine it on, I guess,
Yeah, but you then just send them, and
I
now.
work with CPAs and I just tell them, you know what? Here's what I got in QuickBooks, and I send it to them, and I say, write down what you had on the tax return, and they send it back to me. I just make the adjustments myself.
Right.
Yeah.
But a lot of, the main thing is the balance sheet and getting that to agree, because if you get that to agree, then you have to pretty much have the income and expenses in agreement ultimately. Line by line, it may not agree. But at the end of the day, sometimes it's so hard to figure out how they got from what was in QuickBooks to what they put on a particular expense line on the tax return. What I've done in some cases, because I like knowing, using my trial balance template, that I've gotten things to agree as much as possible. Sometimes what I'll do, if I have a difference spread over a certain group of accounts, is I'll prorate it. And I'll just prorate whatever difference I have amongst a lot of accounts. There are certain things that have to agree. Officer's salaries on an S-Corp. Got to have that 100% in agreement, right? Rent has to agree. The things that have their own line item on the tax return, absolutely, I've got to force to agree. But the things where they might group a whole bunch of different accounts from QuickBooks into one item on the tax return, sometimes it's not always clear how they add up. So for those things, I'll sometimes prorate it. At the end of the day, as long as the critically important expense line items are in agreement, I don't care. I can plug a number on the expense lines on the books just to get the bottom line net income to agree to what was on the tax return.
Well,
at the end of the,
I was going to say, I think about the balance sheet is really more rooted in reality than, you can tick and tie to, things, assets and appraisals and that kind of thing, whereas income statements tend to be more estimates and opinions in many cases.
Right, and we've talked about that a lot in here, is that, I can easily fudge the P&L. I can even somewhat easily fudge the balance sheet. The one statement that I really can't mess with is the statement of cash flows, but that's a whole different discussion for another day.
You don't want to mess with that.
So the bottom line is, when and by the way, I wanted to preface this. I want to make sure I preface this, that when I do this process, what I've learned in more recent years, let's call it, is that even if I have a client that I'm dealing with who doesn't understand anything about accounting, admittedly doesn't understand anything about accounting, and admittedly doesn't care to, I still have learned that it is tremendously valuable to the client to make them sit with me as I go through this process. And I'll tell you why. The main reason is, even when the client who comes in the door saying, I know my books are a mess, even when they say that, they still get so much value out of going through the review process with me that every time, no matter how much they were already convinced what a mess their books were, they still walk out of it admitting, that was amazing, Seth. And it's funny because we were having this conversation in the Facebook group this week. Somebody asked about, what do you say to a client who says, well, how many hours is it going to take? Right? And the point I was trying to make, and I didn't feel I was getting through, and eventually I just sort of gave up in that particular discussion, but the point I was trying to make is that when I go through this process and I bring the client through it with me, I never get asked that question anymore. They pretty much, the only question I get asked is, where do I start, or how do I get started having you clean this up, and how much of a check do you need me to write? That's pretty much what I get.
There for me in the future.
Right. Yeah. And so it makes such a difference in terms of how they walk away from the experience, because I can review the books on my own and I can come back to them with a laundry list of things that are wrong, and maybe they'll believe it, maybe they won't, maybe they'll feel I'm exaggerating it, but when they go through the process with me, there's no BS, right? They've seen it firsthand with me. So the first thing, of course, we're going to do, and this goes into a conversation which we can have in another hangout about what remote login software do you use, but the bottom line is I have them logged in remotely with me, and I go through their balance sheet with them. And the first thing I do is I look at the bank accounts that are on these books, and I say, let's check and see when was the last time they were reconciled. And I know that the Accountant's Edition has the accountant screen, which will show you the list, but a lot of times the client's books, they're using QuickBooks Pro or Premier, it's not the Accountant's Edition, so it doesn't have that. And more importantly, even if they did, I want the client to know how to check this for themselves, because I want the owner of the business to know how to check up on whether or not their bookkeeper is doing their job. So I show them how to go to the reconcile option in the banking menu, and I say, look, not that you have to reconcile the account yourself, that's why you have the bookkeeper there, but look, this tells me this account has never been reconciled before because there's no last reconciled date and the beginning balance is 0, right? And so I say, this is a problem right off the bat. I have no assurance. What?
It's been a long time since I've seen a screen without that.
I actually see it pretty frequently. It's a little scary.
How can you be serious about your business if you don't care about your books? I mean, it's like flying an airplane without using the instrument panel. It's
because you know what they do care about, and this is the other question I ask them even before I bring up the reconcile screen, is I show them their own balance sheet, and I say, do these look accurate to you? Does this look like about what you have in the bank as of today? And sometimes they say, yeah, it looks about right. A lot of times they say, no, it's not even close. Or better yet, I bring up their balance sheet and I've got a bank account with like negative $600,000 in it. And go ahead, Joanne.
No, I was just going to say, I've had a couple of my clients, you brought up a good point that with that reconciliation screen is that I had a few clients that have their checking account connected and they're downloading the transactions, so they never really go into the reconcile screen. And so, so when you go into the register, all the lightning bolts show up, but they've never actually gone into that screen. And there was a few times where I went into that screen just to see how close it was, and found out that they duplicated entries.
Yep, and that's why I tell the clients, downloading does not replace reconciling. Exactly. You still have to reconcile. Yep. And I've had to, not really argue, but I've had a pushback from clients saying, well, I downloaded it. It's matched up with the bank. Why do I need to reconcile? Yeah. And I tell them because you still need...
That's one of the things I think Intuit can do a better job at. Whenever I give feedback, I always want to say, please stress reconciling your bank and credit card accounts.
Right. That was exactly their point that they said.
No, it's not even on the tab of things to do. It's stuck up there in the gear where you assume it's like settings or something. So.
Yeah, so absolutely, without a doubt, the accounts have to be reconciled. And here's how I explain it to the clients who don't know any better, is I say, look, 90% of everything that happens in your business eventually is going to go through the bank accounts, right? Maybe even more. Because even if you're charging things on the credit card, eventually you're going to write a check out of the bank account to pay off that credit card. The only thing that won't ever hit the bank account are things that you pay for out of your own pocket personally, right? Or if you receive money from a customer and never deposit it into the business and just deposit it or cash it, and those kinds of things, which for lots of reasons we can spend a whole hour talking about. There are lots of reasons why it's really bad to do that, But I had one client. You guys are going to love this. I had one client come in the door who didn't remain a client for very long. One of the first thing he told me is, "Oh, I take a lot of the checks that my customers write me, and I just cash it directly against their bank account, so it never has to go through my books, and I don't have to report the income."
Have they heard of lifestyle audits?
And I'm like, please don't tell me that. Just don't tell me that.
Well, that's the first thing IRS asks for is bank account, the bank account so they can look for hidden income.
But it'll never hit his bank account. That's the thing. He's cashing it directly against his client's bank. So the money will never hit.
Business bank account, and let's hope that person doesn't mix business with personal, because then the IRS does go to the personal.
The only way the IRS finds that is they happen to audit his client's bank account and see checks going to him, and then they go check him out, and then they don't see, hey, where's this money deposited, and he can't prove it. So
lifestyle audits. I mean, if you're claiming you're making $60,000 a year and living, like in Redondo Beach or whatever.
Right, but then I say, oh, my daddy supports me, and that happened to be the case with this guy too. Is that daddy was, he was a trust fund kid. So anyway, the point being, most of what goes through the business financially eventually does or should go through the bank account. I know there are exceptions, but most of it does. So the first thing we have to do is verify that these amounts are accurate. And the only way to do that is to see that the accounts are reconciled. And what I will do is I will tell the client ahead of time before our remote session, get your bank statements. I want PDFs of the last reconciled bank statement so that when I go to banking and I go to reconcile, and of course the file I'm looking at here is a sample company file, which is why there's no reconciliation. But I want to make sure that this beginning balance here agrees to the statement.
I just think that's funny that the sample file has never been reconciled. That's a good.
I love
What are you going to reconcile
point to follow.
Little problems with the sample files.
As I say,
Well, it's also in the future, so you have to be psychic to reconcile this.
Files.
I know Charlie Russell actually creates his own sample data files to use for videos, which I just don't have the patience or the time to sit there and create all these dummy transactions. Although I should say now with Transaction Pro Importer, I could actually just change around some of the data and populate it into an empty QuickBooks file pretty easily. But nonetheless, so the first thing is we've got to make sure the bank accounts are being reconciled so that we have reasonable assurance that this information is accurate. And in a small business, we talk about internal controls now. What controls are in place to make sure that this stuff is and stays accurate? A lot of times in a small business, the owner is the internal control because they have their hands on everything, and of course they're not going to rip themselves off. So it's it follows, and we actually, as an auditor, that was part of our audit process, was to be aware of that a lot of times the owner is the internal control. So it was part of the interview process in some cases that we would talk to the owner and ask them questions aimed at making sure they did have their hands on everything if they didn't have the right separation of duties in place. And so again, we could do a whole nother hour on internal controls and how to do that. I don't want to get sidetracked with that today, but I just want it sort of out there for people to think about, that a lot of times the owner is the internal control. That the owner is going to be the one to make sure that they're checking their balances. So I've found from my experience that it's pretty reliable to show the balances to the owner. And first things first, do these numbers look accurate to you? Does this look like about what you have in the bank? And 9 times out of 10 in my experience, they are surprisingly good at knowing instinctively if it looks right or not. And generally speaking, when the owner says, no, that doesn't look right, it usually means it's not right. Something's off. So then I show them the reconciliation. And of course, banking reconcile, we look at each account just by changing the drop down to see what's going on with each bank account. Petty cash, obviously, I do not expect to see reconciled unless they're actually using it in the traditional sense where they're actually having somebody bring in receipts and replenishing and all that stuff. And if that's the case, then I tell them, go grab the petty cash box. Let's add up the cash and the receipts and see if that adds up to the $500 that this shows. If it doesn't, then you got a problem, and that's when I'm going to tell them, look, stop with the petty cash and use debit cards, get cards issued to employees. You can stop them when you need to. There's even systems where you can limit the amount or where it's used. So, I always dissuade them from using petty cash in the way that petty cash used to be used. Nowadays, I use the petty cash account as a way that they can record checks to represent things they paid for out of their own pocket, because it gives them a vehicle in the form of a check to write in QuickBooks so that they don't have to book a journal entry. Right?
That's exactly what I do.
And then at the end of each month, whatever the negative balance is in petty cash, because they've written these checks, I say just record a deposit and book that deposit into the owner's equity account, the shareholder draws account or whatever they're using. So that's the first step, and I spent a lot of time on it because it's a big one. And actually, geez, I didn't even realize I'm running out of time now. We're going to have to... I had a feeling...
Does that generally take reviewing the balance sheet with the client?
Depends on how many accounts there are. The reason today I specifically chose a manufacturing company is because I know they're going to have a more complex balance sheet, which we're going to see in a minute why. But it just depends. So usually what I do, though, is I tell the client to book an hour or an hour-and-a-half session with me, and that's usually enough to go through it. Sometimes it's not. Sometimes we have to go further.
So what if you get stuck on the cash accounts and they have never reconciled, and it's like September in the year and you need this year's information? Do you actually go through and reconcile every month for them, or do you give them the assignment to do it?
I try to give it to them to do, because I'd rather them do it. It'll save them money, and it'll also give them the experience and the knowledge that goes with having gone through that process. So I'd much rather them do it for all those reasons. But if they insist that they really don't have anybody, or they just want me to clean it up, then I tell them that's fine. Just know you're gonna be really overpaying for that service, and I'm that honest with them. So, but sometimes they're like, you know what, it's worth it to pay the extra money for the peace of mind that knowing that somebody who really knows what they're doing has their hands in it and is taking care of it. And a lot of times what they'll say is, you clean it up, and then we'll take it from there, you'll train us. And that's usually how it ends up going. But also in this initial review process, I'm not doing any actual cleanup work. I'm just going through this. So if we go into the bank accounts and I see, hey, these are a mess, they've never been reconciled, then that just goes on the list of things that have to get done. And then at the end of the conversation, we have the conversation about who's doing what. And a lot of times, again, I like to tell them, look, I'm interested in saving you money. I'd rather you spend your money with me on the higher level, more sophisticated stuff after the books are cleaned up, where I can do the cash flow projections and those kinds of things that are much more valuable to you in terms of the money you're paying me. So that's how that conversation usually goes. Now the receivables, again, this is where it's so important to have the owner looking at it. I have no way of knowing if this is accurate. What I'm going to do, of course, is I'm going to go into my customers and receivables, and I'm going to run an aging summary at first, right? And I'm going to start here, and the first thing I'm doing is I'm looking at the over 90 column, because at least that, without being in any way involved in the company, if anything's over 90 days, I know that's probably a problem. And if it is, still I ask the owner to look at this, and sometimes I'm actually surprised to find that the owner will tell me, oh no, this client is typical, they take 120 days, but they always pay. And the bottom line, what I care about at the end of the day, is if the owner can assure me that it's collectible, then I take their word for it, at least at this stage of the game. If I get involved and I see that, it's not true that the client's not paying, I'll bring it up and say, hey, you said they pay in 120 days. I'll make the note, though. I'll make the note that they said that client X usually takes 120 days to pay, and that's why you're always going to see them this far out in the AR. Now, surprisingly, usually, again, before I go into this, just looking at the total receivables number, I'll ask them, does this look like about what your clients owe you? Does this number look right to you? Because, again, my experience has been that the clients are amazingly good at instinctually knowing whether or not it looks right. And a lot of times they'll look at it and they'll say, yeah, it looks like it could be right. A lot of times they're honest and they say, I'm really not sure. Either way, then I go into this, and a lot of times they'll look at this and say, whoa, that doesn't look right. Somebody's out there in 31 to 60 days, they should have paid. A lot of times they say they definitely paid and it shouldn't be there, which means the bookkeeping wasn't done right. It means I've got a payment in here somewhere that was received and not applied properly to the invoice. There's all kinds of things that end up happening just at this stage here when we're looking at the balance sheet and digging into the receivables, that giving the owner the insight, it lets them know, A, whether or not things are being handled properly, B, how to fix it if they're not, and again, I'll have them walk away from this with another item on their list in terms of research that they have to do. And sometimes I'll dump this into Excel so we can make comments on it and say, this is what you need to do. I'll highlight in yellow the ones that they need to follow up on, and make sure that they have a week or whatever time it is until the next section that we have to find out what's going on with these receivables and get me the answer.
Smart sheet.
Yep. Exactly. Smartsheet is a great place to do it. I mean, typically I've done it in Excel, but now I'm using Smartsheet more and more for exactly this sort of thing. And then I can put it in there and assign it to them as a task, and then I can mark it so that I'm notified when they follow up and put a comment in or something. So this becomes critically important, because now we talk about why we beat up the balance sheet and feel that that helps us ensure that the profit and loss is accurate. Here's a perfect example. My accounts receivable ties directly into my income. right? You know, my accounts receivable is the result of my earning income and not being paid for it yet. So if I clean up accounts receivable, there's that much better of a likelihood that my income on the P&L is accurate. Not 100%. We still need to look at it. There could be payments that come in that are booked directly to income, so we still have to look at that and confirm it. But knowing that the AR is accurate gives me that much more sort of reasonable assurance that income is likely to be more accurate. So again, this is how cleaning up the balance sheet ties directly in. Now we get to, and this is why I chose a manufacturing company, because this is where it gets as complicated as it gets. We have all these different types of inventory, right? I've got materials, I've got work in process, I've got utilities, and all this different inventory. And what I'm going to do is I'm going to run the inventory stock status by item report. Or I'm sorry, inventory valuation summary, let's start with. Eventually I want to look at the stock status. But again, I look at them and I say, do these numbers look right? How is finished goods inventory negative 20,000? That looks to me like we've recorded some sales of inventory that we didn't do the assemblies for. Right? That's right away. And again, this is how I'm approaching this. I have this thought process going through my mind as I'm looking at it. Before I've asked the client anything, I'm asking myself, what story does this tell me? A negative amount like this in finished goods inventory tells me we've probably got sales recorded that we didn't build the assemblies for. I've definitely got work in process inventory, so I'm definitely dealing with assemblies that have to be built and that have to go into finished goods before they can be sold. So then right away I point that out to the client. I say, this can't be right. And a lot of times at that point the client says, no, it's definitely not right. And this is where clients who are dealing in inventory get very concerned very quickly because they know this is such a critical area of their business, number one. Number two, it's an incredibly wide open exposure to them in terms of a potential weakness in the internal controls, is managing the inventory. When you have inventory, it's so important to have it managed properly. That's why I have so much content out there on the topic. So we go to the valuation summary, and this is where I can have them look at it with me and say, you know, forget about all this other stuff. This is great for analytics when I know the information's right, but I want, you know, hey, client, I want you to focus on first the quantity on hand here, and I want you to focus on the average cost and then the related asset value that it's given me. So I tell them, ignore everything to the right of asset value for now. I don't care about it until I know that these first, you know, forget about the unit of measure, but that these first few numeric columns are accurate. When I know they're accurate, then the rest becomes relevant and I start to care about the rest. But then I go, and of course the thing to do here, especially if they look at it and say, oh my God, this is way off, there's a very simple answer, and it's a catch-all answer to all of this. Hey, client, go do a physical count. What date can you schedule a physical count for? Right? Do a physical count, and let's adjust the books to agree with the physical count, because there's no truer assessment of what you really have on hand. And to the extent that that physical count reveals different information than what's here, when I adjust it, the natural, if inventory is off, then obviously cost of goods sold is off. Again, we're tying directly into the P&L now. Right? If inventory is understated, then cost of goods sold was likely overstated, so my adjustment to correct inventory will bring cost of goods sold back into balance.
So the income was understated, and you probably underpaid your taxes, right?
Well, yeah, no, because if I overstated my cost of goods sold, my net income is going to be reduced. So absolutely, that means I underpaid my taxes. Don't tell Bruce that, because he's on the phone with the IRS.
No,
Trying
he's
to
off
undo
now.
that problem.
Oh, all right, Bruce, don't tell the IRS that we underpaid our taxes. So the inventory is a critically important area, but in many respects, it's an easy one to fix. The simple answer is go do a physical count, and let's adjust it, and the offset's going to be cost of goods sold.
I'm going to say it's an easy one to fix in theory. Getting the client to actually do that inventory account is not easy.
And you know, because I'm dealing remotely, when they come back to me with an inventory account, I can only assume that they're giving me a real inventory account that they actually took, right? But then I just, as a practitioner, then I just have to document it. I have an email that the client sent me, right, which I'm going to archive in Evernote, right, Joanne? And that Evernote note is going to be my permanent record of what they sent me and when. And so if I ever need to, if I ever get questioned on why did you adjust the inventory to these values, I say, because this is what the client gave me. Remember, I'm not doing an audit. If I was doing an audit, then I would have more of a responsibility to ensure that what they gave me is accurate. But as an audit, the CPA firm has their own staff on site during the inventory count process. They're not allowed to actually count the inventory themselves because that ruins their independence, but they do have to observe that whoever is taking the inventory is doing it, you know, with reasonable accuracy. So, again, things to think about. But as a bookkeeper who's simply trying to get the books compiled, and we assume that the owner has it in their interest to do that they want the numbers to be accurate, so that if we tell them to do a count, they're going to hopefully come back to us because they really aren't wasting our time and their own time and money by giving us false information. You have to ask, why would they do that unless they're just plain lazy? Which is possible. But I kind of operate from the assumption that they really do want their books cleaned up and accurate because they really do want that information that they can rely on and use to make important decisions about the future of their company. So I kind of go on that premise. Right? Now we get into something like prepaid. A prepaid, again, is directly tied into an expense, right? Prepaid insurance is tied into insurance expense. As soon as I see that, I'm just going to double-click the number and see, is there exactly what I see here? This is exactly what I'm looking for, that there should be a straight monthly entry for the exact same amount because it needs to be amortized. When I see this, I feel like, okay, somebody's doing their job. The amortization of the prepaid is being done each month. You can see here are payments going in where they make premium payments for, let's say, a whole year, a 6-month period, whatever it is. Still, I'll ask them, hey, do you have the insurance bill? I'd like to see the bill to verify what the annual premium is. I want to make sure these numbers are right. So that's how I can review and clean this up in case this is wrong. Security deposit, same thing, just double click it and see. I expect to see a single payment from sometime in the past, and I say, and I show this to the owner. I say, hey, is this a date around when you you put down the security deposit for the rent for your office? Whatever it is, I just ask them to confirm, and I get the confirmation. Keep in mind also, by the way, that I'm doing these sessions remotely and I'm recording them, so I have a recording of them confirming this stuff for me also. Not that I'd ever use it. Now, then I see undeposited funds, and I say, oh my God, 18,000 in undeposited funds? Let's go to banking and make deposits and see, do we have some really old stuff sitting in undeposited funds? No. Good news is we just have a few very large amounts, and they're all, hopefully recent.
And so repeat that, Seth, because what you did here was different than just clicking on the number.
Right.
Undeposited funds, every other account that you went down on the balance sheet, you clicked on the number and got the information behind it. Mm-hmm. Undeposited funds is not like that. You can click on it and you'll say, what? You went right up to banking and make deposits to see what was in there.
Correct, because undeposited funds is a very specialized type of account. Now, mind you, if the client does, if I go banking and make deposits, because undeposited funds is a special account, which gives me specifically this special dialog, then I go to the client and I say, hey, client, look at this and tell me if this looks right to you. Are these payments that you've actually recently received? A lot of times I'll see in here there'll be a payment from January. And I'll say, that can't be right. Are you holding on to a check from back in January? And they'll say, of course not. So then there is something you can do, actually, by way of drilling into the number directly. Initially, if I double-click this, yes, it's a mess. I can't make heads or tails out of this. However, there's two things I can do. First of all, in the total by, I can change it so that it totals by customer, because this is very much a customer-driven report. And that starts to make a lot more sense. I can look by customer and I can see which customer's money came in and where it zeroed out or where it didn't. The other thing is what we can do, and if I change this back to a total only, what can also help is notice that I have the clearing boxes all checked off on these, because undeposited funds sort of self-reconciles. It's a self-clearing account by nature.
I think that clearing on the undeposited funds really just simply means that it's been deposited.
Yeah, that's exactly what that means. But QuickBooks actually does, with this account, track if a payment comes in, it won't be checked off until that same payment has been deposited. So QuickBooks does have a specific sort of internal reconciliation function that works on its own automatically on undeposited funds. So I can filter this report to show only those items that haven't cleared. So I go into Customize Report. I'm in the Modify Report dialog. I go to my filters, and I want to find the cleared status. I say no. While I'm at it, I want to run this now for all dates, because if there's ever anything in here that wasn't cleared, I want to see it. And now this gives me numbers that add up to 19,000, which leaves the question, why do I have 18,277.50 in here? Let's go back to banking, make deposits, and see if we can make sense out of that. I see my 9,100. And here, let me cancel this so I can actually see that. Let's move this over. And by the way, once you close the payments, you can click here to bring it back. So I've got my 9,100, my 7,350, and my 2,550, which does add up to 19,000. So which means that I do have a problem here with undeposited funds. This should say 19,000. Now let's change this to all dates. And sure enough, now it evens out to the 19,000, which means that I might have something that was posted ahead of the date that this balance sheet was initially run as of. I could have something post-dated, in other words.
It's a date, yeah. It's always
So
a
it's
date.
probably a date issue with something like that.
Just double-click on the undeposited funds, not from balance sheet, but from the account.
Well, I see what you mean, to go into the register. But even if I do it here and run this for every day,
Well,
my balance sheet was December 18th, right? That was today's date according to the balance sheet?
yeah, well, see, you got a 12/31/18 payment in there, and the date of the report is 12/15.
Right, exactly. And that's exactly, so I just confirmed that here. So I drilled in, but then I changed the date range on the drill down to all dates.
Right.
Here's my 18,277.50 right here as of 12/15, and then it's exactly what I suggested. I have post-dated transactions in here that make up the difference. So that's always good to confirm. What's that?
I was just telling Bruce his check is on the way.
Oh, okay.
You're not watching what we're reading because you're busy with stuff.
I know. I always have to check the chat near the end to see if you guys are, to see if I'm missing anything good.
Bruce has had one heck of a fun time while we've been doing.
It ain't
He's on
fun.
the phone with the IRS.
It ain't fun.
Okay, now we're getting into fixed assets. The only way to verify this is to get the tax return out and compare. Oh, look at Joanne.
Oh, there's a buddy.
That's one way to get Seth.
Squirrel, look, squirrel. Squirrel.
Cosmo.
So the fixed assets, you have to check the fixed asset schedule on the tax return and make sure that it agrees. And if it doesn't, then you have to probably coordinate with the person who's preparing the taxes to find out what to do to get it into agreement. Like Bruce.
Bruce, the Duke of Taxes.
Right, and of course I should see, unless this is their first year in business, I should definitely see accumulated depreciation. So if there's no accumulated depreciation and it's not their first year in business, that means we're not getting those entries we talked about earlier from the CPA or the tax preparer or the enrolled agent.
Seth, I have a question. Going back to undeposited funds, I recently got a client and was reviewing their balance sheet, and they have so much under undeposited funds, like 4 years back. And I've got to clean that up. I mean, it's a mile long. How do you begin to clean that up?
Run away. Just run away. No, I'm kidding. There's a couple of ways I've dealt with this. First thing, of course, is I try to, do it the right way by going in and figuring, because what usually that means when I have old stuff in undeposited funds is they've likely doubled up on their income. Yep. Because they posted an invoice which recorded the income once. They received a payment against that, so that now even on a cash basis that income shows up, but they never deposited that payment, and they left it in undeposited funds. Then somebody, did go to reconcile the bank account, saw the deposit, didn't know why it wasn't in QuickBooks, and just booked the deposit directly to income. So now I have it posted twice. Once in the deposit and once from the invoice that shows as paid. So ideally, you do go back, even though it might be far back in time, and try and clean those up one for one. Let's say it's just totally unreasonable to ask that. What I then do is I take all the old stuff that for sure we want to clean up, and using this example, let's say these undeposited funds are all really old and I just want to clear them out and get rid of them. I select them all, bring them into a deposit, put in a line item, minus 19,000.
Okay, got you.
The question is, what account do we...
A bank account called clearing to keep it out of the cash account, in addition to what Seth is doing.
Right. Well, yeah, you could do that, but either way, it's going to zero out. The way I'm doing it. So,
yeah, right.
So it doesn't matter. But the question is, what account do I put here? And if I know for sure that it represents a duplication of income, then I'll book it to some income account and I'll put a detailed memo explaining exactly what I'm doing and why.
Okay.
In other cases, if I feel that the initial issue of the duplication of income may have somehow already been corrected, then I run it through an equity account. I'll call it something like prior period adjustments in the equity section.
Do kind of what Gina said, put it in a clearing account, and it's on QuickBooks Online. And I'll tell you, I couldn't even get it. There's so many that it wouldn't even let me do anything. I have to probably go one by one. I don't know. I got to look at it further.
Yeah, QBO only lets you look at up to so many transactions at a time in undeposited funds. So you can only deal with, I think it's up to like 500 transactions at a time, which is more than enough for most situations. But if you have more than that, you're going to have to do it in several deposits. But then, Gina, if you're putting it into a clearing account, if you're not, are you zeroing it out like I am, or are you just?
Actually, I zero it out in the account itself. I will take and deposit it. I try to do it per period. I'm either doing it per month or per prior year, and put all the deposits into that clearing account, and then make one adjusting account in that clearing account to wherever I want to put it. Whether I'm reducing the income or prior period, like you said, an equity account.
Right.
I think the big question, though, is that, like Seth was mentioning with the undeposited funds, is that if this is something where income was duplicated and potential amended returns have to be done, that's going to be the determining factor as to how you're actually going to end up adjusting it.
I've had 3 of those this year since April.
Right, and then you have to look at what's it going to cost to amend the return versus just posting the income reversal in the current year and looking at it as a timing thing where last year income was overstated, this year we understate the income, and eventually it catches up.
Yep.
And you have to look at
that's good if you've got $5,000, but if you've got $5 million, I think it's a problem.
Oh, sure. No, clearly for that amount of money you have to amend, but again, you have to weigh out the cost. It's going to cost you roughly for a small return $500 for an amended return, right? And that's if it's simple. It could be $1,500 depending if it's an S corp with a lot of complexities. So that depends, and that's where you have to talk to your tax preparer, right, Bruce?
Yes.
And say, hey, is it worth the money I'm going to pay you to amend the returns and get this right, and possibly alert the IRS to the fact that there's other issues that they may want to take a closer look at? Or is it sufficient to just adjust the books in the current year, knowing that I'm getting it right in the long run, and just roll with it and hope that they don't make a stink out of it? At the end of the day, the IRS is not going to get any money out of it because they're going to adjust me against my favor one year, in my favor the next, and it's all going to wash out. But I will have the time and expense of. So that's something that has to be weighed out. Moving along, and I know we're over time here, but I don't care as long as you guys are willing to stick with me. Dennis, you leaving? Larry, you leaving? Dennis, good? Okay. Accounts payable, and we'll pick this up next week, to do the rest, because I want to be sort of thorough about this. But accounts payable, we look at the same way as accounts receivable, right? I run the payable aging, and I ask the client, first of all, the fact that it's all current is a good sign, right? But if they do see things in over 90 days, I've had that happen where the client looks at that and says, there's no way I'm not paying that bill on time. Something's wrong here. So
I see more times than not credits negative numbers on the accounts payable summary.
Yep. Which means they've, of course, booked payments through to accounts payable without having a bill to apply it to.
So they've understated their expenses.
Yeah, exactly. And that's yet another example of how cleaning up the balance sheet ties directly over to the P&L, right? Because if the accounts payable's off, then the expenses are off.
Either that or they paid the bill twice.
Which could happen, But so the bottom line is that's the question, is if I see a negative number, and you see that on accounts receivable a lot too, which means they've understated their income, where you have negatives because they received a payment from a customer without actually applying it to an invoice. So we're going to continue with this next week. I spent too much time talking about the banking. Next week, we'll get right into things and plow through it. As always, I hope you all enjoyed the show.
Nancy, today on my hangout with IIF Cleanup, if you want to talk about cleaning up your customer list, vendor list, while you're cleaning up the other file, come see me today.
All right, so Gina's hangout today, 2:30 Pacific, 5:30 Eastern.
Okay.
Yep.
Great.
See you next week.
See you
Bye,
then.
guys.
Bye. Bye.
These two